Good morning, trader. This is the beginning of a new week, 23rd of March. What happened in the market now? I'm not going to repeat what's happening in the market. It was in the previous video, but I just want to talk about last week. USD strength coming in really strong. It is due to the yield pressures. Yields had jumped up to 4.415. So now what type of market regime are we in? We're actually in a tightening. That means most of the central bank do not want to cut rate. And it's a risk-off market as well. So what is driving the market now? Market is actually been driving by high yield, rising yield. That's why the USD is so strong. It's being supported and risk assets is under pressure by stock market. And now the market regime is switched to liquidity driven rally, risk off bias, and sell side pressure is building. When I say liquidity driven rally, I will give you an example. That means every rally is not caused by market regime. It's actually caused by no one willing to buy. That's why it's been driving it up, the rally. So now the currency impact of this market regime is USD going to be strong, continue to be strong as long as yields is holding up. AUD will be weak and euro dollar will be neutral. Last week we have a short idea, 0.7075. I'm in the profit now. AUD is actually sitting at 0.7075 pips, not a lot. The market is not yet confirmed the structure change. The uptrend is still remain intact unless 0.6980 is taken. So do not chase the market if you have not short the AUD dollar at the level have entered. Just wait for bounce, liquidity driven rally, only then you add into the short. It could be at 70, it could be 70-30, 70-40. Just look at your lower time frame for entry. I do have a second trade pending for this week, but we have not ended any trade yet. Due to euro is neutral in a tightening risk of market, and it is not a breakout strong lot rally. That's why we will have to buy euro at the pullback. Let's show you the yield. As you can see, the yield jumped really high up, but this is not a real yield. This is just normal yield for 10-year bond. So if you look at real yield, it's actually also jump up very high. Markets very high volatility, jump up to remain at around above 20. And next step is actually downtrend, broken key support level. So let's look at our trade Euro AUD. Okay. So as you can see, last week we are here and I have mentioned this will be supported bounce and then sell the resistance and come back down. And now we actually as a key support level 69.80. As long as the market are not able to overcome this support, the market will continue in a sideways market. So do not rush to sell unless you have managed your risk with appropriate stop loss is still at 71. So if you sell now, your stop loss will be very far away. So make sure you adjust your lot size. And the second trade that we will consider the go in is euro dollar. As you can see, this is a very strong downtrend. Now we're making a 3 legs up. Haven't taken out this high, 65.50. Haven't taken it out. So technically speaking, this is still in a transition phase where downtrend transition is sideways market. So we only look to buy in pullback as long as the market regime remains not changed. So we have to pay attention. I only looking to long euro dollar at 1.6390 or 64 or 6380, and the stop will be previous swing low around 618. So manage your risk a little bit. I will consider to add on long until 63, because when euro dollar is in neutral, the big buyer will normally try to push the price to the next level where people put their stop. A lot of people will put their stop if they have long somewhere here. So euro will have a tendency to take out all the stop here before it's go up. So do not chase the market. Just make sure it is buying pullback, not breakout.